Hey guys, Cousin Benny coming to you on the 14th of July from theclosingprint.com with a look at the week ahead. On my blog the last few days, today as well as last week, I mentioned a few things regarding what I'm thinking in terms of the S&P 500, whether we continue in this bull trend, whether we flag out here and move a little bit lower, and what all that means to you as a trader. Looking at the New York Stock Exchange Summation Index, the NYSE, we had a crossover back in November that we all remember. We had a reading of minus 132 and recently a reading of minus 174 before we got a crossover. The vertical lines are crossovers to the upside or bullish signals. We saw NYMO at lower extreme readings at the same time, and currently we are seeing 52-week highs on many of the indexes as well as stocks. So looking at the indices with RSI enabled on all of these candle glance charts, we can see across the top the comp, euro, top 100, the Hang Seng, the industrials, the mid-cap 400, the NYSE, the Russell, S&P 500, XAX, the All World Index, and the Japanese market, EWJ. We can see that for the most part with the comp as well as the mid-cap and the SP 500, we are in close to, if not in, overbought territory. We're trading above the 20 and the 50 period in most cases, and also pretty far away from. So being above the 20 and the 50 period, if you aspire to mean reversion, you'd look to the indices to start moving back towards equilibrium, or the 20 and the 50 period, or at least flagging out here. And the Russell in particular is pretty far away from its 20 and 50 period, trading at all-time highs. We can see the industrials at double top territory as well as the mid-caps. The highs that we saw in May, we are at currently. S&P 500, same thing. And when you take into consideration bond yields on a short-term basis as well as the cyclical nature of the markets and seasonality, that we could expect to see some pullback at some point in time, which is exactly why I took some money out of my 401k and mentioned in this blog post today that I was looking to put some money into TLT. If you look at TLT, we can see that we put this low in March and we ran back up. So on this pullback, we are at the best price for an entry that we haven't seen since March. So if you are of the mindset, as Yukarowitz mentioned in his blog, buying the blood, well, this is the time you want to be looking at bonds, not stocks. Okay, so you can click on this link here and that'll take you to Yukarowitz's blog. If you go to my site, theclosingprint.com, you can also scroll down to the bottom here, and I have my favorite links here. This particular link is the Fat Pitch. That's Yukarowitz's blog, and when he's not on vacation every week, he usually has a summary of what he's looking at with regard to the markets. Okay, so that's Yukarowitz in the Day Trader Bootcamp chat room, and also his site, thefatpitch.com, at this address right here. So let's take a look at the sectors. We'll go to my candle glance sectors chart and we'll pull that up. I talked about this as well. All of the sectors are trading at highs or are flagging in the case of BKX and KRE, which we traded during this trend run up. We are currently pulling back on KRE. We flagged on BKX. I'm expecting that we could pull back a little bit more if we saw a reversal in TLT and that moving higher, and money starting to flow back into the bond funds, being all of these sectors have seen a pretty good run over the last few weeks. XLF is at highs. We see XLE approaching a double top, even though crude is at highs. We have XLV close to a double top, XLY trading at 52-week highs, and so forth. XLK at a double top. So technology, you want to watch that. XLB, we have a little bit more room to run. We have this recent high here that we need to take out. Semiconductors are right at a double top. So if you're trading stocks, you want to consider the fact that we had a nice run over the last few weeks and that bonds are due for a bounce. Yields should pull in a little bit. We're at highs. If we go to my bond candle glance and take a look at those, you can see the yields have pulled back and are flagging. The 10-year, we're right at the 20 period moving average. So you want to keep an eye on bond yields and also TLT for any indication that we could see a reversal. Now is the time to be buying bonds if you're interested in same. Of course I would scale in because we could see another move a little bit higher. Looking at TLT again, we are bouncing off of the lower Bollinger Band, and you want to consider the fact that 95% of price action is contained within the Bollinger Band. So the idea that we could move lower is plausible, but it's more likely with these flat period moving averages here. The 200 period is this particular average. It has turned down a little bit over the last couple of months because of this move down, but for the most part, when you're trading flat like this, you want to trade the upper and lower Bollinger Bands. So you had a signal here to take a long here on TLT at the beginning of the week. So it's yet to be seen whether or not this break above the 10 period EMA can continue through the 20 period, but that's what I'm banking on. So I'll be scaling into TLT, in particular a bond fund, a Vanguard bond fund this week, because it does pay a hefty dividend, and I don't see much more upside on the S&P 500, Russell, and the Qs for the short term. I'm talking about August and September. If you look at this nice little chart that Hugh Horowitz has on his site, the Dow Jones 1 year pattern since 1950, we can see that typically we have a run up in the winter time through July and August, and then from August until September we typically see a move lower on average during the years since 1950. Okay, and the green is all years. The post-election year pattern is this one, and the blue is current. Okay, so I like to look at probabilities, so that's why I'm considering scaling into TLT and taking my profits on the S&P 500 sector, or excuse me, the S&P 500 funds that I am trading, namely TRBCX, the T. Rowe Price Blue Chip Growth Fund, where we are trading just outside of the standard deviation 2, or second standard deviation, Bollinger Band. Okay, so this typically contains 95% of the price action. We have RSI nearing a overbought territory. We have stochastic and MACD pointing up, so we could see a little bit more upside, but for the most part I am banking on a move back down towards the 20 period, which is the center line of this weekly chart. Note that we are at 52-week highs on TRBCX and all-time highs. If we look at the daily, we can see we're trading outside of the Bollinger Band. We have RSI at overbought territory. We have MACD pointing up, and histogram is peaked. In my opinion, we should look for a move lower versus a continued move higher, and we see standard deviation is continuing to point higher. So I'll be looking for these two to turn down to scale out of more of my funds that I have in my 401k. Dodge & Cox is one of those funds. Note that we're also at the upper Bollinger Band, trading outside of. RSI is in overbought territory. MACD is where it is, and the standard deviation is up above 250 per day. So I'm looking for this to pull back in and revert to mean. Let's take a look at the weekly. And the weekly looks pretty much the same as the daily, being outside of upper Bollinger Band, closing right at it. RSI is in overbought territory, so it's more likely that it's going to turn down than stay up here and in bed. But anything is possible. And we're trading right around the average, which is the blue line on the weekly as far as standard deviation is concerned. Note the lack of momentum. We're starting to get smaller histogram signals here, trading around the signal line and moving average. If you are a new trader and are concerned about stocks being at highs and you're thinking of trading in a bullish manner, you could always look at SPXU, which is at the lower Bollinger Band. You would want to watch for a green candle that closes above these two as a indication that perhaps the trend is reversing. Watching your spiders and your SPX as well. For a long trade, you want to see RSI turning back up as well. Let's take a look down here. Yeah, so the standard deviation is at 125, pointing higher. MACD gave us a signal, and just like the opposite with regard to the two funds in my 401k, I'm looking for this to reverse the MACD histogram. So that's what I'll be looking for. If you want to do this from a new trader standpoint and you only know how to go long, SPXU is one of your possibilities if you don't know how to go short or if you don't trade options. Looking at another chart on Hugh Horowitz's site, these red boxes are 3-month periods. Okay, and typically the longer consolidation you have, the longer it takes to consolidate and to build a base, the stronger the trade out of that base. So we are shy of a 3-month period here, and almost about half, and we are approaching overbought again. And typically you want to see the overbought signal here on your RSI to get down below 30 and turn as a better indicator of a strong move higher, like you can see on this particular chart here. Again, this is on Hugh Horowitz's site, so you can check this out. But this is a pretty strong indicator for the longevity of a move higher, considering how far we came down or how shy we came on this recent turn back up. Okay, like we see here on our recent move down off of highs, we did retest the breakout area here, so we could bounce, but the probabilities are greater when you see oversold reached on the downside. Okay, so again, this is just a read for the week ahead. This is Cousin Vinny coming to you from theclosingprint.com as well as Day Trader Bootcamp. I typically now post my watch list here in this box. So you want to check back here on Monday morning or Sunday night. I'll be doing some scans on possible trades for the week ahead. Okay? So take care. I hope this helps, and we'll see you in the room tomorrow.